Welcome back, jitters. Our analysts are ready to present a red-hot market review. The fever on Wall Street yesterday did not bring much change in the market quotes and trading sentiment. The major benchmark stock indexes closed mixed on Thursday. The Dow Jones inched down 0.5%. The Nasdaq looked 0.1% uptick. And the S&P 500 shed 0.3% to close at 3,790 points. Wall Street indexes traded on an optimistic note in the New York pre-market, and the S&P 500 is expected to trade in the corridor between 3,720 and 3,870 points. The benchmark indexes managed to recoup sharp intraday losses almost in full. The indexes found support from remarks by Fed policymakers who calmed down market jitters. Christopher Waller and James Bullard, well-known Fed hawks, said that they would advocate for a rate hike by 75 basis points in July, not a percentage point, even in light of the faster-than-expected CPI for June. Before the policymakers made their remarks, Fed funds futures showed an 83% probability of an increase in the federal funds rate by 100 basis points. Now, investors have downgraded their forecast to 48.7%. Notably, the Federal Reserve raised interest rates at such a rapid pace more than 30 years ago. It lifted interest rates from 8.75% to 9.75% in February 1989. 8 months later, the stock market went through one of the most dramatic intraday crashes in history, known as a Black Friday, when the Dow Jones plummeted 7%. The retail sales data for June released today indicated that consumer sentiment is better than expected. Despite runaway inflation, core retail sales in the United States grew 1% in June on month, higher than the forecast of a 0.8% increase. Sales at petrol stations rose at the largest degree by 3.6%. Moderate sales growth was recorded in grocery stores, furniture stores, dinners and restaurants. On the minus side, low retail sales were reported for building materials and clothes. Commonly, retail sales consist of consumer goods and are not adjusted for inflation. Core sales, excluding cars, gasoline and food, climbed to 0.8%. Later today, investors will get to know the Consumer Sentiment Index by the University of Michigan and inventories data. Market participants do not have the full picture at the moment, but the robust retail sales could again arouse speculations on a rate hike by 100 basis points. Apart from the crucial macroeconomic data, investors are monitoring quarterly reports by large American banks. Fresh reports on the corporate earnings again discouraged investors. Wells Fargo reported that its quarterly profits contracted 48% due to the allocation of huge funds to cover Wall P losses on the credits. BlackRock and the Citigroup followed suit and reported declines in the profits in the second quarter. As a result, shares of the bank traded lower in the New York pre-market. Moreover, Alibaba shares slumped 4.89% in the pre-market in light of the news that the cloud division of the high-tech giant has been summoned for talks by authorities in Shanghai in connection with the theft of a waste policy database. Fed officials Raphael Bostic and James Bullard are due to speak tonight. The US dollar index dropped off the 20-year high at 109 and retreated to 108 points. The index is likely to trade in the corridor between 108.10 and 108.70. Comments by the Fed policymakers that calmed down Wall Street. Investors took the shine off the US dollar. The greenback is taking a breather while market participants are digesting a fresh bench of data, including the optimistic retail sales and the decline in import prices. Amid the pause in the greenbacks rally, the euro, the sterling and the yen are gaining ground. The Canadian dollar is also taking advantage while the US dollar is losing its grip. The USD CAD pair went down from 1.3200, the highest level in 2 years. Today, the currency pair slipped to the comfortable level of 1.3000. The intraday corridor is defined between 1.2990 and 1.3080. The loonie also has found support from a recovery in the oil prices. The oil markets regained some losses incurred this week amid the prospects of a less aggressive monetary tightening. Today, US President Joe Biden is visiting Saudi Arabia, taking part in the summit of the Middle East allies. He is going to call on large oil exporters to expand their oil output. For the time being, OPEC members are drilling crude at the highest capacity, thus they might not welcome Biden's proposal. Nevertheless, oil prices are regaining losses following a 7% slump earlier this week. Brent futures rose 2.07% to trade at $101.15 a barrel, and WTI climbed 1.82% to trade at $97.61 a barrel. Bitcoin looks gloomy, though it's still oscillating in a wide trading range between $19,000 and $22,000, having closed above the psychological level of $20,000. The token went upward in confidence. The flagship crypto has been able to surpass resistance at $20,500, hitting for $20,800. The next target is seen at 21,200. Once it's taken out, the price could challenge the upper border of the range. Still, the scenario of a Bitcoin's decline to 20,000 looks more realistic. Let's see whether stock investors will be able to retain optimistic sentiment by the end of the New York session. Trade prudently with the InstaForex and follow financial news on InstaForex TV channel. We wish you profitable trading and have a nice weekend. See you on Monday.